So, as I was saying, today's Wednesday. As usual, we have quite a particular webinar on Wednesday, and this is basically getting low risk and high reward setups into the Forex market. So I've separated a few currencies here that we're going to be looking to trade today. Of course, we're going to go and run through most of them, but it's on a very turning point, from my perspective of the market. So, hence why we don't have too much opportunities in a sense. We always have opportunities, but at this moment, looking at these currencies, these are the ones that there are most favorable setups for us that I've been looking today. Okay, so we're gonna go through and run out of those ones, and then after that we're gonna come back, and then we're gonna do the close of the day. Now, before we go any further, as usual, as always I do, let me see if there is any new person here. No. Yeah, so there's no one new, so that's okay, not a problem. So you guys already know how that works, and I don't need to sort of explain too much in depth. But for those who are watching into YouTube, or maybe watching for the first time on YouTube, maybe wondering, how we do that. So after the risk disclaimer, I'm going to go a little bit more in depth and sort of show out for everyone how to do that. There you go. Cool. So here is the secret. I would say it's not a secret because I'm sharing with everyone now, but today is Wednesday, as I say, so we use the FinLogic sentiment tool. Okay, so that's where majority of the trades we take are from. And we've been coming from a really great month. From the last couple weeks we had, it was really great trades. So last week, I'm not too sure. I think we ended up not having much trades, but the trades we had was take profit already. And then the week before that was take profit as well. So I think we somewhere up around 250 to 300 pips for this month already. So that's like, if you're using one lot size, full lot sizes in all of the positions, or one lot size in general to use, you would be made already $3,000. But if you use 0.10 lot sizes, or let's say 0.5, you would have made 1,500 around. It's a round expectation. It's not that's what you would get. It depends from everyone. Balance account, like if you did hold the trades for all of the way, or if you close, or it just depends. But I'm just giving an estimated. So that's the power of what I'm like going to present for everyone. So stay tuned until the end, because I do have something I want to give out in the end that I haven't yet gave for anybody. Okay, not even on YouTube, nothing. So stay with me until the end, that you will be able to get to know what I wanna share with everyone. Cool. So FinLogics, it's no secret. I've seen that. I've showed that already for everyone. So that's where we get the sentiment tool, and it's free. Okay, you definitely have all the websites. Majority of them are paid. So for FinLogics gives out for free. So I'm going to send it out the link for FinLogics, because not only the market sentiment, but they have also economic calendar and also earnings calendar. I'm not a stock trader, but if you are a stock trader, that's something that most likely will catch your eyes in a sense. I don't, but I should be paying attention on that as well, but I don't pay attention. Anyways, so go into tools, just scroll your mouse on top of it, don't need to click on it, and then you go into market sentiment, and then you click on market sentiment, and you wait a little bit to load. I've also just sent the link into the chat, so everyone can have the link. So yeah, that's pretty much the market sentiment too for those who are watching on YouTube for the first time. So what we like to do here is we like to trade the minority. Okay, so in this case, the minority would be only 1% long. You can see here there's only 1% long. So that's exactly what we would be looking to trade. In this case, we have 31% short. So that's the minority. So we would like to be short in that market. All right. So that's basically how we use the FinLogic's sentiment tool. Now let's open a chart here. Go into super charts. There we go. Okay. All right. Perfect. So the first one is the New Zealand against the US dollar. So let's see where the New Zealand against the US dollar is. So as I say, if you pay attention, I've said in the beginning that it's the market sounds like it's on a tipping point because majority of the trades are below 20%, right? So assuming that they are above, the majority is above 80%. And as you can see, the short positions, there's two neutral, and then there's another one with 31 and then the 5 and then the 1%. So my very simple opinion is that I don't like to trade the very, 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 very minority. Okay, and what I mean by that is the 2%, the 3%, the 5%, 8%. I don't like to trade that. Now, anything above 10%, I would be more than happy to take a trade. Same goes for the other side. We have 5 and 1% here. I don't like to trade those ones as well. So I just leave aside, okay? Because as I say, I've been testing out a few ways to see if there is any possible way we could trade that, but there is ended up to be no possible way to trade those minorities, just because it's too much on a tipping point, and then the market can come back all the way. And the market can come back all the way from like long 2% to long 50%, or short to 98 to 60%. So it's really not worth the risk. So I like to stick with the ones that are above 10%, and preferable the ones that are just turn to be the minority. So let's say we have 50-50, right? So it becomes 60-40. I love to trade that type of market, because that 40% can squeeze down all the way to 1%, and that's when I know that the big move will happen. So I like to catch the move right on the beginning. Okay, I hope that makes sense. So now the New Zealand dollar is right across on the bottom before the two neutral pairs, and we can see there's only 40%. And as I just gave the example, that's the most like good timing to get into the market. So let's have a look into New Zealand against the US dollar. This one. Perfect. So New Zealand against the US dollar, we had this trade open. I think when was that? It was last Wednesday. Yeah, because let me check. Yeah, that was last Wednesday, because the market was here. And then I say, we have to have a break above and then a pullback. Then the order got triggered and then moved the stop losses to break even. So you would have get around, let me check actually, from here. Oops, sorry. Why is it not going? It's not working. Let me go again. Oh, there you go. So you would have get around 35 pips to 30 pips, because then you would get stopped out into break even. As I say, close 50%, stop losses on break even, or close even more, 60% stop losses on break even, because that can happen. Okay. And we don't want that to happen. Just to late after that, we have this whole move up again. So The New Zealand dollar is up again into our trade base. And I really like to trade that because we've been having some good responses to the market in itself. Okay, so I've mentioned about 60 being the target. So we still can target that 60 cents because it's a round number and it's the closest round number we get. So it's around 60 pips away, actually 64, 61 pips away. So it's a good take profit. It's a good sort of momentum. But after that, we can definitely target the top here. That is around 60 cents and let's say 500, just because it would be the easiest point. Okay, so these two would be my first targets around for long positions on New Zealand against the US dollar. Especially after we get the CPI from yesterday, we can see that the US dollar has been losing quite a bit of grip. It's down. That was down 0.73% after the release of the CPI. And as I say, there is a possibility of the DXY breaking through the 98. So if they break through the 98, it tried, but it wasn't successful. So if break through the 98, then we can have something that will go even lower, maybe to 97. Okay, that would be the next bottom right here. Let me do 97. Okay, so somewhere around this level. So it's a full dollar, and it's definitely possible. Okay. Now coming back to the New Zealand against the US dollar. So we're taking advantage of a weak US dollar, and we're looking to trade the New Zealand dollar against the US dollar up. So there's a few ways we can trade that. Let me go for the 15 minutes. If you want to go and just trade to the 60 cents, that would be the closest one possible, closest target as possible. You have two options. You can enter at the market price right here. I would look to have my stop losses below these lows and my take profit above at 0.60. Okay, so it's a good trade. It's nothing fantastic because it's a quite standard risk reward, but it's really great. Okay, you would be getting around 2.2%. So that's 41 pips for the New Zealand dollar. And the stop losses would be around 18 pips. So stop losses, 18 pips, take profit at 41, 42 pips. So that gives you 2 times to 2.3 times your risk. So you're risking $100, you would be getting around $220, $230. Okay, so it's a pretty good advantage of the market. So if you just enter the market, then you're already into profit. Now, if you want to be a little bit more cautious and just sort of wait, okay, because I like to have pending orders, and lots of people say that, oh, my pending orders don't always get hit, and when I see that the market already fly out. So am I doing something wrong? Well, not necessarily, but for pending orders, you need to think that, okay, so let me give you a simple example, right? And it's not particularly for anyone here, but I've seen cases that people are like, oh, okay, cool. So I want to get long into New Zealand dollar and I want my entry to be at 58. All right. So let me just represent that like here, and then we take profit at 60. Perfect. So I want my entry to be here at 68. I mean, listen, your entry won't get triggered. Okay, I'm going to be very honest with you, just because it's really, really far away. And it's like really far away. It's 1,000 points, so it's 100 pips away. And that takes a while to get there. It's not the price you want. You don't have to think about that because remember, we are literally on a tipping point. Okay, so the market can explode up anytime from now on. because remember, we're looking at the sentiment tool and it says 40%. So it just swapped. So the majority is short, 60%, and the minority is 40% long. So it literally just swapped from 50-50 to 60-40. Okay, so that's when you would be looking to get involved, and that's because you want to have the most of that trade. Okay, so don't think that the price may come back down here at 58, and or even like here, something like that. It's not reliable. It's not about where you want to get. It's about looking at price action, and that's when the price action sort of makes sense for me. Looking at the price action, what we have in front of us. Well, it's quite simple. If we get a rectangle, we can see there is like some sort of resistance, or in another way, sellers making pressure for the market to don't go above this level. Okay, so we understand that if the market goes above this level, there is a strength that is driving this move, and the strength is the buyers. Okay, it's a constant fight between buyers and sellers. So that's pretty much it. Now, we can't put our entry over here because that would be the most suitable scenario for us. Put the entry over here and then stop losses below here and take profits above at 60 or 6,500 because the price already reached that. So if the price goes below this area, I'm not too interested on this case. So what is the most suitable scenario in my opinion? Well, really simple. There's either you can do, where's my pencil? Over here, brush. So you can either wait for the market to break and actually confirm that move. Small pullback here, like immediately when that candle of the 1 hour sort of breaks above, we will probably be able to see already a retest. Something like that. So if you look at here, right here, you have, let me just take this other one out. You have a break and then a smaller pullback. That's where you should be looking to enter. Okay, so that's exactly what I would be looking to do with the New Zealand against the US dollar. On a smaller time frame, you can still do that right now because we have over here. So if the market breaks this stop and then sort of just pushbacks at 59,600, we're probably going to get a move up to 60 cents. Okay, so that's where that's how I would be looking to interpret this entry. Not at market, not below, but actually wait. All right, so something like this. Let me get the arrow. So as soon as it breaks, I pull back, and then a continuation up to 60 cents. Okay. Sorry, guys. Let me just send the webinar link because someone is probably not able to join. And the support is sending messages into my Teams. There you go. Perfect. So I've sent to them. And now I can share my screen again. Done. So as I was saying, market is, I would wait for the market to push back up and then back down at this area of 59,700 and then up to 60 cents. Now, stop losses and take profits, of course. So let's say we get a best entry around this level, okay? Take profits at 60 and stop losses I would place below this level, okay? Oh, but it's not the greatest risk reward. It's nearly 1-to-1. Then what we do is we drag this trade up to 6,500, and then we get a 1-to-3 risk reward. So we're risking 20, 25, 27 pips to get back 83 pips. So you're risking $10 to get back $30. You're risking $100 to get back $300. You're risking $1,000 to get back 3,000. You're risking You're risking 10,000 to get back 30,000. You're risking 100,000 to get back 300,000. You 1 million to get back 3 million. Okay, so it goes on this flow. Now, 1 to 3 is a really decent. Okay, I'm going to be very honest with everyone. Don't try to chase 1 to 10, 1 to 8, 1 to 20, 1 to 50, 1 to 500, 1 to 1,000, 1 to 100. Yes, they do exist, but it's once in a while, at least in this strategy. I'm not talking about, but the YouTuber X or the YouTuber Y and the YouTuber Z, they do this and they do that. Yes, but they have different strategies, different methods, different entry criteria, different entry models, different discretionary trading models. So it's different. For this trade scenario, for this trade strategy, 1 to 3 is absolutely great. 1 to 4 is gorgeous, and 1 to 5 is absolutely best you can ever get. So 1 to 3 is awesome, right? It's really, really great. Imagine you're generating 3% profit in your capital in less than a month. So you're doing 3% per month times 10, that's 30% already without compounding the interest. Times 12, that's 36% without compounding the interest. What investment gets you 36%? I'm not even compounding the interest because I don't want to even, but it probably would be 42%, 38 to 42%, depending if you take out the cash or not. But, let's work with 36%. So which investment would give you 36% per year? Like literally, hedge funds are paying you 18% per year. Fixed income is paying you 5% to 6% per year. And you're making 3% in one trade in less than a month. It's insanely crazy. Okay. I know that on top of $100 may sound like, it's $3. It's quite, not substantial amount. But when you think on top of 100,000, that's $3,000. When you think on top of 200,000, that's $6,000. When you think on top of 1 million, that's $30,000, and it goes like that. So it's quite substantial amount when you have a bigger capitals in a sense. So hopefully, I like to be realistic with everyone. I like to be very front forward, and I think that's why you guys sort of like me as well. I don't like to be do this, do that, and then get 100 trades. And no, I think realism is what gets the most out of every webinar I do. I've never say anyone would be, rich here from trading or anything like that. But in a sense, 1 to 3 is awesome. Now, going ahead, the next trade is the GBP USD. Okay, so okay. Let me just refresh that so there's a glitch, a bug actually happening quite the last couple of weeks. Every time I come back to the page, a few of them just suddenly disappear after refreshing. So you just refresh it 2 minutes ago, refreshes every 15 minutes. So what you have to do if that happens is just refresh the page, reload the page, and then everything will come back to normal. Wait a minute. There you go. So all the pairs are here now. Okay, next one is the GBP USD. That is still very, on the top of the tipping point, but we're still above 10%. So we are at 14. So let's have a look at GBP USD. That's the trade from last week. So the trade from last week, we got 150 pips take profit. This one didn't got hit, but if it would be, summing those two together, we would have approximately 211 pips profit. So that's really great. Okay. We can take this off, this one as well. Actually, we can take everything off. Let me just put in 4 hours to check. Yeah. See here, the smaller the number, the bigger already happening. All right. So as we checked into New Zealand dollar, it's 40%. So previously we didn't had any up big move. We're having that now. It's happening that now. When we look to GBP/USD, that it's only 14%. We already had a big move up. Okay, that's a 4 hour. So we put in 1 hour. We already see like big spikes up into the market. So that's the difference, and that's what I want to bring for you guys to understand. The smallest the number, the bigger the movement past already have been. The bigger the number, the smallest past movement have been. And that's where there is a possibility of us engaging into a trade and capture the future big move that will happen, that will probably happen. Okay, so I have a few targets for the pound against the US dollar, and I'm going to be quite, I would say, robust into those trades. Okay. Oh, okay, cool. Yeah, I can repeat that. Not a problem. So the smaller the number over here, the smaller the number. So if it's below 20%, the biggest the move already happening. The big move already happening. All right. So you may be able to catch, but you won't be riding the full move. You may be riding another half of this move up. Okay. So let's say something like that. Show you. So from here to here, we have 2.8%. So half of that would be 2.4%. 1.4%. So from here, 1.4% would be around here. So that's the move we're probably going to get, probably half of it. Now, the bigger the number, like the New Zealand US dollar, the bigger the number. So let's go for New Zealand dollar. The smaller the move happening. And we're looking for probably another move, the full move here. So from here to the top where the price is now, it's 1.87. So let's give that, let's call it 1.9 just to make the math easy. So that would be 1.9 times 2 is 3.8. So 3.8 up. 1.9 up. Sorry, 1.9 up. So, somewhere around these levels. So that's what we should be looking. I hope I made that clear. Did you understand that, Sweets? Or do you want me to repeat on another sort of way? Yeah, very clear, Captain. I'm not the captain, mate. You're the captain here. Cool. So, okay, interesting. The price is moving quite fast into New Zealand dollar. Look at that. Let me go for a 15-minute. So, wow, that's actually a big move. So, breaking like that, it's pretty great. So just now, wait for the market to go above this this level of, what was the price? 59,720, and then break that and then come back, push back around this level, and then we can enter the trade. Now, getting back to GBP/USD, as I was saying, take this out, this one out as well. Let's go for the 1 hour. So perfect. So my target for the GBP/USD, it's quite a robust target, as we're saying. I'm looking to go at 1.32 726. 1.37 265. We can actually downgrade that to 200. Okay, perfect. I think that's better now. Yeah, 1.37200. Yeah, cool. So 1.37200 is my take profit. Now, there's a few ways again to get into this trade, and it's going to depend just on how patient you are. So going for a smaller time frame, we have better risk reward because the take profit would be higher and the stop losses would be tighter. So there's of course, really, really good area to enter the trade if we get a possibility around here. So if we put the Fibonacci up, it sort of try to push it back from like the top is here. If we break this stop, then we most likely won't have the market pulling back at this area, maybe around a little bit below these levels. But at the moment, we have to work with what we got, and the top is around 1.35200, and the bottom is 133, pretty much 135, 134, okay, 130, yeah, 133, 990. So my honest take here would be waiting for the market to pull back below these lows. Okay. So let me take the Fibonacci out and zoom in a little bit. And get the pen. Okay, so the market come back below these lows. So something like that. And then looking to go higher on the market. Okay. So my entry would be below these lows. I know it's a strange entry point in a sense, but it will make sense once the entry is active. So let me grab where is that? Oh, here. So long position below these lows around here. Stop loss would be below that low here. Okay. There is a possibility, right, of us getting stopped out because of this square, this box for the market. Possible comeback below here, and then it sort of trades like that, gets down to this, and then it goes up. For this reason, what I'm going to do is we're going to place this trade here, and then we're going to have a second trade option that would be below here on the stop loss. Take profits would be exactly the same, and then our stop loss would be somewhere around here, just below these lows here. Okay, why? So this is a more aggressive entry. Okay, because the stop losses are tighter. It's only 44 pips compared to this one that is 81 pips. So it's pretty much the stop loss is double. The take profits are the same. There's no changes on the take profit. I'm really confident on this take profit at 137,200. But there's a possibility of the market just, sort of getting this box first before moving up. And for those who have been following me for a while know that I really like to follow those boxes. Okay, so hopefully that makes sense for everyone. Now, why do we got two options? Well, as I say, the first one most likely we're going to get a possible pushback. So that's a little bit more of aggressive entry, and this one is more of a it's still a very good reward. It's 3.4%, so 3.4 times your stop loss. But that gives a little bit more room for the market to wiggle around. Perfect. Now, the next one is the Aussie against the US dollar. So the Aussie against the US dollar, if we look at the chart, actually, yesterday we had the RBA cutting 25 basis point. And we still, as I say, I was still waiting for the market to push back here first and then moving up. That was one of the trades from last Wednesday. But that didn't quite happen simply because it break this dash line here and it pulled back on the dash line and then it continued to go up. And that's not what I want. I want it to be more of a simple trade, you know. I wanted to be seeing the market pushing back here first and then moving up, but it's just take off without us, and that's fine, I guess. So now let's try to find a better opportunity to get in. But the position was right. The position, not the direction was correct. Okay, that's what I like about this trade setup. The direction is right, like 70 to 75% of the time. It's just about getting the right entry. Okay, cool. So here is simple. Let me go for 1 hour. I have a really big target in mind for the Aussie against the US. That is the 68 target. Okay. I've been targeting that for quite a while, since like a couple months back. For those who have been following me know that. Sorry. There you go. So 68 cents, it's one of my targets for the Aussie against the US. I really don't expect that to be reached in 2 weeks. Although it could happen, you know, but it's not feasible in a sense. So what I'm looking to target is the closest round number that would be at 66. Okay, so 0.66. So that's the closest rounded number, and it's the top of this before consolidation that was happening here. That we've tried a couple of times to break to that level, we couldn't. So most likely the market is just coming back at that level and trying to, play around again. So going to a 50-minute, it's quite easy now to see that the setup here is quite similar to the New Zealand against the US dollar. So we have, I would like to the market now to come back at this level. And stop losses would be below this low, because if the market sort of breaks that, I really don't want to be into the position anymore. And my take profit would be at 66. Okay. So again, not the best in terms of risk reward, but still a pretty good trade. And most likely with that push, we will be able to get to 66. Just previously looking at that, market have been into that area. Market like to be there. So if there is any sellers that want to place some positions, that we wait to 66. So mainly that's the whole point of getting into the position. Of course, when we look to the FinLogic sentiment too, it's still very close to the 20%, so 17%. So the biggest move, sort of already happened, as we can see, but we still want to catch that little bit that we go to the 66 cents onto the Aussie against the US. Okay. So that's my third trade. So first one was New Zealand dollar against the US, long position. Okay, we're looking great at the moment. Anytime the order can be triggered. Then we have the GBP USD. We have two possible positions. So one for the trade to come back down now, and that position can maybe get triggered, stopped out. And then we have a second position on that's a little bit below the risk reward. So this one is a higher risk. It's a higher reward, but a higher risk. This one is a lower reward compared to this one, but still pretty great. As they say, 3% per trade is awesome. No banks pay you that. But a bit of a more risk in a sense, less risk in a sense, because there's more room for the stop loss. So there's more room for the market to wiggle around. Okay. And then now we just got the Aussie against the US dollar, long again. Looking to target 66 cents, waiting for the market. The position can be triggered anytime soon. Look at the market to come back at this sort of area here. Even better would be if we can get a market back down here. So that would be fantastic, actually. Let me place the position down here because that's where the most point of contact we had into that. There you go. So that's pretty great. Okay. Market is really just breaking that top now. So any little pullback down here would be great for us. Last but not least, I've separated the CAD Japanese yen because we still have a bit of possibility into a strong long position here. So let's have a look at CAD Japanese yen. Now let me move down. Let me move up to 1 hour. Perfect. So over here we have this sort of ranging bound market. In my opinion here on CAD Japanese yen is that there is still a possibility of us going higher. Okay. As we all know, the Canadian dollar, it's really well correlated with the WTI prices, so the oil prices. We know that the oil prices have come down quite a fair bit in the last few months, I would say, in the last past 3 to 4 months. But there is a chance of Canadian dollar just explode against the Japanese yen because even we had USD Japanese yen, even having a really bad CPI and sort of the market pricing a cut for the Fed for September, like 90% priced in, we may have the Japanese yen not that strong. So for this reason, hence the Canadian dollar against the Japanese yen. So this trade is quite of a risky trade. Okay, so my target would be somewhere around these highs here at 108. 108. 108. My entry would be just as the market, where the market is at the moment, somewhere around here. And my stop losses would be below this low. So it's not like the best trade that we have into the books, but it's a good trade in a sense. Okay. We can squeeze a little bit out. It's a 1 to 2 trade. So we can wait a little bit for the trade for the market to pull back in this area, because we are on a somewhat parallel channel. There you go, like that. We are in a somewhat of a uptrend line. Okay, so if there is a possibility of us catching that little, just a tiny bit of a move, we can possibly make some good profits over there, or we can get stopped out below this bottom, and then that's not more interested for me, into my opinion. Cool. So let's just go over the trades again. That's pretty much it. So let's go over through the trades again. New Zealand dollar, pound dollar, Aussie dollar, and CAD Japanese yen. And I tell you, one of the things I've been waiting to tell you guys, as I say, as I promised into the beginning of the live, for those who have been with me until end of the video, I would be telling out and sort of, I haven't told anyone yet. You guys will be probably the first one, but that's going to be pretty cool to share. Once ready, that's going to be pretty cool to share for everyone. All right, so the first trade, New Zealand dollar against the US dollar. So when we look to the FinLogix tool, we have only 40%. So that's really great. We're catching the first beat of the move, and there is a higher chance of us catching a big move ahead, okay, like it's just happening. So anytime soon now, we can have a pullback on the market around the level of 59,700, and we can have the position triggered. Okay. Next, we have GBP/USD. So GBP/USD, it is already did quite of a move. So there's only 14%, but still a possibility of us catching the last bit of that move. if we have a possibility of market coming down below these lows, and the stop loss will be below this wick. But if we get tricked out on the stop loss because of this box here that the market can possibly come to execute that, then we have another position exactly where the stop loss is, and the take profits for this trade is at 137,200. Okay, as I say, the most risk reward you have, the better risk reward you have, is the smaller stop loss, only 44 pips is stop loss. That gives you a 5-1. And then over here, you get a 181 pips is stop loss. So that's quite a bigger one, but that gets more room for the market to move around if needed. Then we go to Aussie against the US dollar. So Aussie against the US dollar, it's quite similar as the GBP USD, but there's still a possibility of catching a move over there. So Aussie against the US dollar. So now we're waiting for the market to pull back. If you feel like you're going to miss out on this trade, you don't need to wait for the market to pull back all the way down to this price. You can just, sort of drag up into the white line. That is the break of this stop. Stop losses continue the same. Take profits continue the same. It's just take out around 10 to 15 pips into your take profit. But as I say, 2% is already a really good trade. And then last but not least, CAD Japanese yen. So CAD Japanese yen still quite good, 16% only. And we're waiting for the market to push back down at 107,200. Stop losses would be just below these lows, because if the market breaks these lows, then really don't make any sense for us to stay into a long position. And the take profit would be at 108. Okay, so basically looking to the last move of this uptrend line. Cool. So that's it. We come around to the end of another one, and what I want to tell you guys is actually I'm writing a little ebook for everyone with my tree strategies. Okay, so I really don't know when that's going to be ready just yet. But yeah, I'm literally giving everything out in terms of my on that ebook. So I will be giving out of course, this strategy, the FinLogic Sentiment Tool strategy, and not only using FinLogics, but there is other websites as well that we can use. I also be looking to do my Excel sheet. Excel spreadsheet strategy. And the last one is the COT flip. So the the commitments of traders flip. So that would be out probably by end of this year, because it's quite of a work that I need to do, and I'm doing by myself. I'm not doing as like an ACY or anything like that. I'm doing as Luca. So it's going to be free, of course. I'm not going to charge anything for anyone. So I'm going to, once that's ready, I'm going to give it out for everyone. Okay. So hopefully that will help everyone that is on the journey to get the trades. I've quite a lot of knowledge over this period. So I just want to share with everyone what I've sort of acquired. Okay. Thank you so much, everyone. Have a great day, a great week ahead. I know that's a very quick week already gone. And I'll be back tomorrow from 4 to 5 p.m. Sydney time. And I will send the link into the web. I will send the webinar link into the Telegram group as per usual. So for those who are not into the Telegram, then there is a problem. So you need to be into the Telegram to get the right link. Thank you so much, everyone. Have a great day, and chat to you tomorrow. Cheers, guys. Bye-bye.